All right, so today we're going to dive into some indicators. Maybe a bull run indicator has been confirmed, or are we maybe setting up for retracement in the markets? Today we'll be breaking down some signals, but also maybe some bullish signs as well. Make sure and stay tuned right here. My name is Paul Barron. Welcome back into Tech Path. All right, so let's get started. I do want to thank our sponsor today. That is iTrust Capital. One of the things you can do about a crypto IRA, especially if you're starting to kind of plan for year end, this is one of the places you can check out. Go to their website, itrustcapital.com. You can buy, sell crypto, gold, silver, all within your IRA. It's very easy to set up and start. You can also do a new one or do a rollover, all sorts of ways to get involved with iTrust Capital. And of course, you'll be joining 7 billion in transactions and over 200,000 accounts created out there. Make sure and use our link down below. It's going to give you a $100 funding reward. And of course, it does help the channel out. So try it out. Let us know. All right, so let's get to a few points here. Some indicators right now that we've been watching have been very bullish. And some of the ones I'll show you, you could look at them both ways. But I think there are some underlying things here that could be brewing around the markets that could start to shift maybe your strategy going into 2024. I'm going to go to this first tweet right here from Genevieve. She hits on this. This is Grit Capital. If you guys don't know her, she does a great job with her newsletter. But anyway, everyone, Black Friday hit record 9.8 billion in online sales, which is up 7.5%. That's a pretty significant rise in numbers. When you look at retail as a kickoff. And that's the kind of thing that is a bit scary as well. And there's some points here that I think will identify it. Of course, Shopify hit a record 4.1 billion in sales up. There's growth in that market, I would still say double digit, 22%. That's pretty significant. MasterCard sales are plus 2.5%. That's a significant lift in retail. Typically retail is 1%, 2%, 2.25%, 2.5% is pretty significant. And then the one that scares me is this one right here, buy now and pay later, up 47%. Now, I will give it part of the fact that some people maybe just now have started to discover buy now, pay later. But for us to see this kind of lift year over year is pretty significant, simply meaning that we could see a lot of pressure on continued credit problems within the US. And at some point, do household savings finally get to a point where they dwindle and we see a major impact on the market? That's really kind of the results of what these numbers are kind of showing. Another tweet right here. This is from Kobe Easley, breaking now, buy now, pay later, of course, 20% compared to last year. Those numbers were kind of tested there. It's also expected to jump 19% on Cyber Monday, which is happening right now as we record this. This could go to a record 782 million. That would be pretty significant. There's a lot of people also looking at this from, when you think about just savings, which have gone from 2 trillion to zero. Americans are relying now on debt more than ever. And of course, we've talked about this before, and that has been the rising impact from credit card balances as a whole. And I think a lot of people have started to feel the pinch there. The question is do we see a continued pressure on the American credit system, or is there going to be a line in the sand at some point where you just don't cross, or is it just going to kind of follow along with the debt system? I don't know. I'd love to get your impact and your feedback. Make sure and drop some comments down below and smash the like button. If you guys like these kind of videos, this is one thing that can help people learn a little bit more about, what the future of blockchain, especially around crypto, can be for not only the economy, but I think also the banking system in general. 64 U.S. banks, speaking of that, 64 U.S. bank branches are filing to shut down in a single week. I'd love to know if you guys are affected by any of these bank shutdowns. Some of these, including PNC, which were the most, they had 12. I think between November 12th and 18th, there's going to be several locations now to shut down with PNC, 19 branch closures. JP Morgan also has had 18 filings all over the country. Citizens Bank, third, they had 8 branch closings, and then Bank of America also had 5. 64 branches in total. Now, some of this could simply be that we're seeing a major shift towards digital banking, which I believe is what's causing this. Retail banking is not what it once was. And I think now with all the amount of digital goods, online ordering, e-commerce, the fact that we have so much in terms of direct deposits, ACH, all the tool sets that have been kind of lining up fintech for the last few years, I think is leading into just going to fewer banks in terms of physical. Problem with that is that means probably less and less use of the US physical dollar, which could lean into scenarios around a CBDC down the road. So that's another factor. Gold also hits its high. 2,000 bucks sets a 6-month high record as the dollar is retreated. This is something that is a little bit rare because typically we'll see gold when we see a dollar retreat. We typically see crypto bump, simply meaning dollars coming out, going into other markets. And of course, we've already seen this happen with gold. Couple points that I'll focus on here on this article is what's moving gold at the moment is US dollar because of the recent soft data. This has been soft data around what's happening from the Fed in terms of CPI and also the potential around some of the signals around when you think about the data that the Fed needs for them to be able to make their decisions. These are the kind of data points that Chair Powell, of course, is most likely going to go with another, pause in terms of a rate increase. But economic figures coming out U.S. week, both on growth and also inflation front, should make case for whether gold remains above 2,000. If we continue to see soft numbers, possibly we could see a little bit there. Another point right here, currently the market broadly expects the Fed to skip a rate hike on the December policy meeting, the FOMC, pricing in roughly around a 60% chance of a rate cut in May of 2024. That's fairly low in terms of the chances, and I've heard both the Fed kind of talk about rates for longer, but we still haven't seen this, this trailing indicator of the market of it being able to say the Fed is finally at a point where they might go on and do a pivot. And I think that's the key thing that is going to continue to play into this. If you look at gold, look at right here. This is the 4-hour chart and kind of came in right there around 1937, started around the 13th of November, and then has been just edging up right here. Again, good signs right here if you're a gold holder, but more importantly, does this continue to push on other assets, especially with Bitcoin and also Ethereum, I think, going forward? Some people look at this as one of the pre-indicators that can cause and help other asset positions, much like what we see with Bitcoin. One thing that kind of flows into that is Bitcoin spot ETF anticipation. This, of course, is the biggest preparation, I think, a lot of people in terms of fund inflows, looking at Bitcoin as an opportunity. We saw a little bit of a retracement over the Thanksgiving holiday on Bitcoin. Question is whether or not we see a 31K. Some analysts are starting to look at that. There are some signs that there is still some downward pressure on this. But I think, is there a fatigue now, or is it just this little bit of scenario? Remember, December 5th was a date that we had Mark Moss on last week, kind of pointing to a potential ETF approval. And I'm still questioning whether or not that is going to have a major impact beyond what we would see in the initial lift. And I'd love to get your feedback. Do you think this is going to be a long-term play or more of a short-term hit? All right, so let me break down a couple items here in the article. Crypto fund inflows at asset managers such as 21 Shares, CoinShares, Bitwise, Grayscale, etc. added 346 million last week. Other things to look at, combination of price rises and inflows pushing total assets under management at firms to over 45 billion. That's pretty significant. That's the highest in more than 18 months. So again, this could all be leaning in on what's happening for a Bitcoin ETF. And if you look at the market inflows right there, you can kind of see it right there. Not bad in terms of where this is going. But again, the question is this more of a long-term play on Bitcoin as a price trajectory, or is this simply going to be one of those pump and dump opportunities around selling the news? James Seyffert kind of hits in on a couple of points right here. GBTC is trading at a record low discount. Very bullish signal. If you think about this for the last few years, around 8.6. Its official closing right now is around 9.7. It hasn't been this close to parity since July of 2021. GBTC, if you don't know that, is the Grayscale Bitcoin Trust. And with their recent win over the Fed, how this may play out in the SEC, how this may play out going forward, at least in GBTC being turned over to an actual ETF is the question. And I think maybe this is why we're seeing so much market action right now. Tech Talks Macro kind of hits on a couple points. If you're doubting the ETF narrative is driving the market right now, then this chart should change your mind. You can kind of see right here. Here's Bitcoin, and then here's the altcoin runs that we've seen. And we have not seen a big move in ETH or a handful. Now, granted, there has been some pretty positive moves in some of the super degen tokens that have moved a little bit over the past couple of weeks. And then outside of Solana coming up to around 60 bucks, Avalanche, bumping in on 22, there's been a handful of tokens that have continued to fly. We haven't seen the numbers that we've seen in previous altcoin runs in the past. Doesn't mean that we're even in altcoin season right now. Cathie Wood is also rumored at selling some of her Bitcoin holdings. Reduction sparks a little bit of market speculation. I don't necessarily think this is a big deal. 700,000 shares of Bitcoin Grayscale Trust. And I think the point on this, again, remember, 21 shares, what we're going to see with ARK in terms of an offer around an ETF for Bitcoin, sure, that could play into this, but I think this is her just leveraging into other asset classes within her innovative funds, which she still puts blockchain as one of the key factors for innovation funds. And a couple points within this article, the tweet drew parallels, similar scenario in 2021 when Woods encouraged people to buy Tesla. And then same time, price targets 3,000 while covertly reducing their positions around 84. So I don't know. I'm not saying that that's what she's doing here, but there are questions. So it is raising some questions about the transparency of Wood's investment strategy and the potential of impact on ARK's investment overall performance. So you tell me, how do you think this signals, if any, that Wall Street is doing these kind of moves around, especially around Bitcoin-related investments? This came in from Eric Malshunas. Just another article on how ARK is selling GBTC and how that means they aren't really bullish on Bitcoin, that they're making room for ARK-B. Neither is true with ARK. You got to look at the weightings. This is something we've talked about quite a bit, is the weightings on that innovation side of what ARK is really about. And I think that's kind of where it's playing. They continue to press on around diversification, and it's been their strategy, I think, is pretty clear for quite some time. I want to jump over to Binance because Binance is still in the news. Couple of points right here. First blog, of course, from Mr. Tang is coming in as the CEO. And there's a few points he hit on right here. Within the blog, as an industry, we require more focus than ever on collaborating with policymakers. That's a very interesting statement coming from Binance because they've kind of dodged it for quite some time around the world, not just here in the US. I'm eager to work with peers across the industry. Critical effort. Know our voice will be heard more loudly if they're united. I would agree. I think Binance coming to terms with the U.S. around what's happened in the past few years is a good sign in the direction that Binance might be coming of age as an exchange within the United States, especially, which will be one of the leading factors around their growth and whether or not they'll be able to go head-to-head with Coinbase. Most importantly, we take our responsibility as a custodian very seriously and maintain a one-to-one backing for every user asset. So your assets are protected. I mean, listen, we've heard this from a lot of people in the past. It hasn't been true. Not saying that it's not true, but just take it with a grain of salt. We understand this is going to take some time to really kind of correct. I want to jump over to a clip from Brian Armstrong that kind of references this a little bit, but listen in.
This is vindicating of our strategy, and I think it's good for the industry too to sort of turn the page, make sure that we're following the laws where it's clear today around AML and KYC. And then also make sure that we're getting clarity about the areas of the law where it's not yet clear in terms of commodities, securities, and there's new legislation on the horizon that I think Congress can help with there. Yeah, well, obviously it's important for people to remember that these two things are apples and oranges. Ours is a civil case over some technical issues about what is a commodity and security. And as I mentioned, we're availing ourselves of the court here to go create that regulatory clarity for the industry. And so almost regardless of the outcome, at least we'll finally start to have some clarity from the court. The Binance case here was a criminal matter, obviously, with much different facts and circumstances and a huge dollar amount that is quite a bit different.
So, I mean, I think that Brian kind of hits it on the point. One, they are polar opposites in terms of the case scenario. One company registered as a publicly traded company in the United States has been abiding pretty much all the way through not only the regulations that have been available, but also the way that they presented their business model in the IPO itself versus what we saw with Binance. And, Binance, obviously a criminal case. So if you look at what's happening here from the DOJ, this I thought was interesting because I'm kind of struggling on this because it looks to me like they lured CZ in and then kind of shut the door behind this. Or is it that maybe Binance is, I don't know, maybe there's something else working here with the Department of Justice and what we might see within regulators around Binance coming back to the U.S. as a certified or at least a licensed, money operation. I don't know. This is going to be just some very interesting moves right now, I think, overall. Obviously, CZ now considered a flight risk. So that is intriguing, to say the least. I know he was tweeting and he put up a blog post. There's been a few things that he's kind of not completely let go of. And I think this is one thing, once you get in these kind of situations, best thing to do is just shut up. Just be quiet. Best way to deal with it. Now, what isn't being quiet is the fact that we have some markets that are on the move. And these markets are important. And the reason they're important is because they've started to embrace what we know here in the US as being the eventual outcome, which is that we're going to see Web3 and a lot of the crypto and blockchain projects become to life here in the United States once we see some regulation. Japanese market embraces USDC as Circle and SBI set the stage for a Web3 kind of run up here. And this is an important note here with what's on this article. I want to kind of jump into a couple of points within this. SBI Holdings joined forces with Circle to promote USDC and Web3 services in Japan. Obviously, this is all capitalizing on a lot of the regulatory changes there within Japan, and they aim to boost USDC adoption in Japan. Very interesting there as well, considering what's going on in the Japanese market. To achieve this, SBI Holdings is actively seeking registration as an electronic payment instrument service, pending approval from Japanese authorities. If they get approval, then, and you bring in this kind of partnership level with USDC, this is only going to bolster the position that we talk about all the time, and that is the United States losing a bit of groundwork here overall on where the market is going. Banking services to support USDC access. SBI will now provide banking services to Circle. This will obviously enhance the access for liquidity and businesses in Japan. This is the same thing that I think will happen here when we get stablecoin regulation. 70% of USDC adoption is taking place outside the United States. That's right, outside the United States. Remember, Circle is an American company that holds a peg to the US dollar. 70% of its growth is outside of the United States. This should scare a lot of politicians around how many of these companies could and will be continuing to grow. Another tweet here I wanted to hit on. This is one from Jeremy Allaire, USDC. He's announcing basically this deal with SBI. Let me kind of zoom in on this. There's a couple of points here. June, Japanese government laid out a vision for the growing Web3. That was the situation where they put into effect the stablecoin laws. This is the thing I think will happen here in the US. These changes, they've dramatically opened up opportunities here for stablecoins and Web3 in the world's fourth largest economy, with what's happening in Japan. And then further on, dollar plays a crucial role in cross-border payments. This is in FX trading, especially in the Japanese market. This will extend into the adoption of digital dollars used on blockchain networks. Another big reason that USDC will continue to do very well there. What you're seeing here are fruits of major governments who have established regulatory clarity for stablecoins, good actors working together across traditional. This is the normal course of business. And this is a thing that I feel like is continuing to hold up the United States. And man, I just feel like we are at a position right now where we are absolutely going to just, skyrocket once we get some sort of alignment here. Here was Allaire also kind of toning in on a tweet from Mark Cuban. And this is really about what Web3 could mean to the industry as a whole, meaning it's got a lot of use cases and utility outside of just, NFTs and gaming. The on-chain economy is coming. Fanciful ideas a few years ago can now be clearly articulated based on tech that is here today and emerging regulatory clarity. And this was in reference to Mark Cuban saying, hey, you'll have smart contracts on ZK-L2s, which will check a construction permit being issued. He's talking about real estate being utilized in blockchain and NFTs, and especially on smart contracts. All this tying into it. And I think what Allaire is referencing here is that, remember, the last bull run that we had, none of this tech was really ready, and nor had it been really built on to scale. That's changed in this one. I think all of this is coming to a head at the right time for sure. Hey, listen, if you guys are not in the Diamond Circle, make sure and jump in right now. It's another place you can get some additional content. We have a couple of shows over there. You don't want to miss them. Of course, the Web3 Blockchain Gaming Show by Kyle. He does a great job. Make sure and subscribe to the Diamond Circle. You get additional alpha. We'll leave a link down below. It's very simple. Of course, you guys can catch me out there slashing on X I'm Paul Barron. We'll catch you next time right here on TechPath.